Welcome to the first time I've actually made a video explaining some of the option trades from the weekly option show. So hopefully this is of value and you guys like it. Definitely subscribe to the YouTube channel as well. I'm going to be creating more content here around option trading and just taking a look at some trades that I see during the week as well as for the show. So we'll start off with Kopin Corporation. And right off the bat, I liked the fact that this call option that I could sell, notice we're in April 16th, so this is the monthly, but this call option is bid more than 10% higher than the strike. That's something I oftentimes look for. It's something I prefer. My goal is always to make, I like making 10% on my covered calls. I do not see this as a risk-free strategy. I've mentioned that on the show. And so if you're going to do a covered call, you should at least get paid and compensated well, because it's not the option that bears the risk. It's the actual stock, right? This stock is $11.14. It could go down tomorrow. And so we have to be aware of all of our math. We have to be aware of our break-even point to be able to make sure that we don't lose money on this trade. And with the cover call, our break-even point is the amount that we sell this option for. So in this scenario, it would be 145. You take the stock price that you're paying, so 1114 minus that 145, right? And here's a stock chart that I'm looking at for Kopin. I like that it's had this run up. It pulled back. You can see there was earnings that was a little bit stronger than expected. And the market ticked a little bit lower and has been pulling back. And I like that right now, this stock is actually sitting at a similar level. But the momentum now is on the upside. And just as a quick look, I'm going to actually take this down to more of a 30-minute. I like looking at shorter time frames just so you get a closer look at what was happening intraday. So right now, this stock has been climbing higher. Looks pretty good. The momentum is to the upside. Look at that momentum just pushing higher, pushing higher. So that is actually why I'm comfortable buying this stock, as well as selling that call option against it, knowing fully well that my break-even point is somewhere down here, which actually has been this sort of 920 area. I think 946 or so was our break-even, and that would actually be this line down here, which has acted as support, right? So I'm positive. Let me move this up. We'll try and get that even, and then we'll go here, and I'm using TradingView as my charting platform. But I don't mind my break-even point. This is my break-even point. It really has been sort of the support for the last couple of down moves that we've pushed higher through. So I like this trade for those reasons. So let's see. Our next trade was on, I believe it's symbol VUZI. Vuzix. We did so this has been in an upward move, and we looked at a credit spread of this symbol, looking at selling the April 28 put at $3.80. That's where the cursor is now, where the arrow is, and buying the April 27 put for $3.40. So what I like about this, we're going to hop over here and look at this stock symbol for a second. Once again, we have a market that is pushing higher. And I can take it out of the 30-minute. We can pull it back to the daily. It's looking strong. It's been strong for a little while, right? This has been strong for a little while. And with this market going up and going up significantly higher post earnings, at least, the idea is that if it continues holding this upward strength, then we could lock in a nice little profit in 4 weeks by trading, by selling a put spread. Because remember, put spreads actually increase in value as the market goes lower, or when you sell it, you can expect that put spread, if the market continues to stay where it is or go higher, you expect that put spread to expire worthless, and you actually get to keep the 40 cents that you sold it for. Doesn't mean that interim there couldn't be another pullback. We saw a pullback here, we saw a pullback here, but I like that each time this seems to be finding its way to another higher high. This is the hourly. I like to move time around. I don't know if you guys have seen my technical analysis video, but I believe in that. How to trade stock using technical analysis video. I talk about the importance of looking at various time frames, and I've mentioned that on a previous show as well. But look at this strength. Lots of green bars pushing higher, regardless of if it pulls back a little bit next week or not. I think this stock has the ability to push higher and higher, and possibly even continue on to. I mean, it's been making new highs, so I don't like to get in the way or go contrary to this amount of strength, this amount of force going higher. I would much rather participate and follow the action higher as well. So that's that. And I believe our last one is going to be, it was a debit spread on Bank of America. We have to flip over to the April 16, because this is the monthly. So there you have it. Buying the April 37 call, paying $2.32 for that call, and then selling the April 38 call, which is for $1.66. That's where I got the price, the 66 cents for this spread, hoping for a 34 cents profit. And so when we go over and check out Bank of America, take a look at that. Once again, we see trending markets. This market has been trending higher for quite a while, and even when we saw a little bit of a pullback, it pushed on higher. We've seen pullbacks and pullbacks, and as long as the economy is still going decently strong over the next 4 weeks, you can expect this trade most likely to end up finishing in the money, and remaining in the money where it is right now. Let's go ahead and look at just really quickly, for the fun of it, we'll pull out some moving averages. So I like looking at moving averages and getting a sense of where the company really is with regards to its history. And this will show you really quickly that this has been in an uptrend, and as such, I don't want to trade against that trend, so I'm not buying puts or anything, because I think this has been going higher. So when you see shorter term, this green line is my 10-day moving average, the red is my 20-day moving average, and then the 60 down here is the 3-month moving average. 60 trading days. The red line, with it being a 20-day, is actually a 1 month, and the green line ends up being a 2-week. This thing is still going up strong and pushing higher. So as long as it's pushing higher, I really want to create trades and look for trades that are going to benefit that. So when the market's going up, I'm either buying call spreads or selling put spreads. You could do covered calls as well, but the numbers just don't line up as well. We can look at that real quick. The numbers don't line up as well. 115, given the strike of 39, just is much less appealing. I'd rather just buy this spread and ride this market higher. So that's going to be it for the trading explanation video. Thank you guys for listening to the podcast. Thank you for watching the video. And as always, happy trading.